You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 3 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That funkiest of tunes. We round out the week here on the network with the funkiest of funky tunes. But that funky tune means it's time, once again, for a little show we like to call Around in These Parts. This Week in Futures Options, a.k.a. TWIFO. Of course, this is the program where we break down all the action, the hither and yon, the sturm and drang, the ebb and flow in the world of futures options. That could be corn, soybeans, palladium, platinum, feeder cattle, S&P, E-mini, WTI, you name the product, and we'll light it up here on the old show. We asked you guys to do just that. We'll get into the results of that in a little bit. Of course, you can find all of the fun back episodes of this program, as well as all of our other fine 15 programs on our network. Easiest place, the mothership, the flagship, theoptionsinsider.com. While you're there, make sure you read around a little bit. A lot of fun stuff to read. Our daily hot options, actually multi-times a day, hot options reports, our unusual activity, a lot of that stuff. You guys eat that stuff up. Of course, breaking news on the options market, education, some strategery, all sorts of fun stuff thrown around in there. Check it out, theoptionsinsider.com. You got some time in your day. I think you're going to like it. And, of course, while you're there, you can just mainline audio till your heart's content. All of the episodes, TWIFO, all the other programs on our network. Of course, you can always get them across all of the other flagship platforms, iTunes, TuneIn, Google Play, New Edition, iHeartRadio just came online for podcast last few weeks, so we're up there as well. So you name the outlet, we're there waiting for you to download and stream. And, of course, you can always get us via our own app available for iOS, Android, and the beloved Fire OS. All right. And joining me on the old program today, beaming in from all sorts of fun. He's been on the show from an exotic parking lot in Long Island, an exotic parking lot / soccer field in Denver, various areas in the south suburbs that shall not be named, all sorts of places. So my cohort, my partner in crime, Mr. Nick Howard, the founder of Bantix Technologies, creator of a little platform we like to use a lot around here called Quick Strike. Mr. Nick, welcome to the program, and where are you beaming in from today?
I am beaming in from the regular location of my office, but technical difficulties with Skype. I'm trying to type a message to you, and it's cutting off my message at 8 characters. So I don't know. Oh, here we go. I needed a message back from you. So we're in good shape. So I can wipe the bead of sweat off my brow and get started in earnest. But I'm sitting in my comfortable chair in front of my computer, so it should be much more relaxed.
Why is it always the tech guys who have the most technical problems?
I'm telling you, I'm fighting battles with email, all kinds of stuff today.
Whenever we do our tech show, those guests and those co-hosts always have the most problems. It is kind of funny when you think about it. The most tech savvy. Maybe you're too much on the bleeding edge for your own good.
Bleeding today with some of the things I'm fighting here, but we're all good now, ready to go.
We're all good. Well, speaking of ready to go, I thought we'd ask our listeners today, Nick. We said, hey, a lot of stuff's lighting it up kind of this week. There's kind of a smattering of products lighting it up. But what are you guys interested in? What are you guys really excited about us talking about? And for the most part, they were pretty much just about as split as we are. I gave them the choices, Nick, of gold, crude oil, E-mini, S&P. Of course, S&P is selling off pretty aggressively. We are recording this and streaming it live Friday, September 9th at right about 3 p.m. Central. So if you are around, we'd like to see you here in the old Mixlr, M-I-X-L-R chat room is how we stream the program out. Of course, you can always get it on demand after the fact, usually out Monday morning for your convenience on your commute to work there as well. So we asked them, Nick, crude, gold, E-minis, and other. And if we said other, you had to give us your answer. And a lot of people chose other and then didn't give us an answer. They kind of missed the point. So if you say other, you have to give us what you would like to have instead of those. And one person did. One person suggested margin. I politely said to him, we won't talk about margin. He wanted to compare, I think, span versus stan or something. We didn't want to put all of our listeners to sleep. So we opted politely not for that suggestion. But as of right now, as show start, Mr. Nick, it was pretty much an even dead heat. It looks like a few more votes pulled in just as we were kicking off the show here. So E-mini, S&P, ever so slightly taking the lead with 36%. So I guess, Mr. Nick, we're going to start there. We don't talk E-minis. We don't talk equities that much on this show, quite frankly, because we have so many other programs on the network that we talk about that on. We don't often get to that on this program. But today is an interesting day. As you're listening, that date may ring a bell, listeners. The major indices off pretty aggressively today as we're finishing up the day here. The S&P off over 2%, about 2.25 percentage points to wrap up the day. Tech-heavy NASDAQ off even more, actually about a similar percentage point, about 2.25 as well. And the Dow, a little bit of a laggard, only down 1.8%. On the day, and of course, all that downside, giving some love to the volatility space. VIX cash closing up north of the 16 handle, actually pushing 16.75 or so, up about 4.25 handles today. Or if you are one of those percent of a percent people, 34%. So let's get into the E-minis. Of course, you guys, in addition to streaming live on Mixlr, you can always follow us along cmegroup.com/TWIO this week in options. And, of course, you can run your own reports. So if you want to pull up the E-mini for yourself and see exactly, hey, what the heck's going on out there in E-mini, you can follow along with us on the show. You can also run it anytime during the week, and it'll show you the previous rolling week. So it's always rolling for you. So you guys can see exactly what's going on week to week out there. And whatever products you like, E-mini, gold, palladium, feeder cattle, whatever floats your boat out there, it's all there. So let's pull up the old E-mini here. On the old Quick Strike. Been an interesting week, Mr. Nick. From a week-on-week perspective, the S&P is off about 50 odd handles at this point. Yeah, but about 47, 48 of those coming today alone. So quite the shedding of value out there in S&P land today. And as you might imagine, with all that downside, like I mentioned, VIX and vol spiking fairly aggressively. VIX is, of course, the implied volatility of the SPX options, which are S&P 500. Not exactly the same thing as the E-mini, but pretty darn close, so they tend to move. And when vol is up in SPX, guess what? Vol is up in the E-mini as well. They tend to be sister products. And so we're seeing a lot of impact there. Vol skew coming off aggressively, which may surprise some of you, off a 1.5 to 2 points, depending on where you're looking across the term structure. But that tends to be, and that tends to be how these things work. When you're looking at volatility skew, you say, oh, well, in general, slow move to the aggressive, to the more richly bid puts, which, of course, S&P has investment skew. Puts have rich volatility premium, calls not so much. So in general, move to the downside will increase vol. That's true, and that's what we're seeing. But we're also seeing the skew kind of coming off a little bit, because when you move into those aggressive parts of the skew, we tend to see that come off a little bit, actually, as the skew tends to pivot around wherever the at-the-money strike is. Probably do a whole show on skew and its impact, Nick. But needless to say, this is kind of what you expect when you're moving into those rich options. Some of those people taking those off the table today, so they'll be selling some of those puts, taking those in, and other reasons that make that skew kind of come in a little bit. And so that's exactly what we're seeing today, with off about a handle and a half to close to 2 out there in the very, very near term. Kind of the weeklies are the skews coming in pretty aggressively. And in terms of what's really lighting it up out there, first off, open interest up extremely as well. That's not really a surprise, Nick, given the fact that we're coming off the most doldrumy of summer doldrum periods. August was, I think, weak no matter how you cut it. Overall volume off 25 to 30% depending on the product you were looking at and the big indexes out there. So it was a very weak time. Beginning of this month didn't really kick it off with Labor Day, but now we're back in action, and apparently the market is waking up, bringing some actual volatility back to the marketplace. As of this morning, the 30-day realized vol out there in the marketplace was a whopping 5. So we needed something to happen, Nick, and I think we were finally getting it today. So like I said, open interest up about 8%. Again, that's coming up on a pretty weak number from recent weeks out there, but still, any increase is a good one at this point. And the option leading the charge out there in E-mini S&P this week are the weekly out there expiring next week. 2,200 calls. These are going out on the 16th, so they have one more week to go effectively. And these are lighting it up to the tune of 62,000 contracts lighting it up out there. So a substantial amount. Granted, total, we're seeing about close to 1.5 million contracts in the E-mini S&P. So it's a very active contract, 62,000. A wee drop in the bucket, but still, from an activity perspective, that's where the action was. So kind of surprising given the pronounced sell-off that we see calls leading the charge, particularly pretty far out of the money at this point, calls. So that's kind of interesting. Then right behind it, though, were the 21.5 puts trading about 45,000 contracts today as well. So puts not forgotten, not by a long shot, but it still was very much the calls where the action was today, which I think is a little bit surprising. Maybe people loading up on a bit of a rebound. And pretty much if you're looking at where that call action came, it was all today. 45,000 of that 62,000 coming in on Friday. The rest of the week pretty much anemic, not even really counting for much at all. The puts, same deal, 19,000 of the 48,000, so a little less than half. Coming today, 11,000 yesterday, so pretty active more towards the end of the week. Also 12,000 coming up on Tuesday. So they were more active spread out throughout the week, whereas the calls were pretty much only active today. Again, interesting, maybe an overriding time, but I don't think so given today's activity. Could be a lot of people coming in and positioning for an aggressive bounce here. Maybe some people will be left holding the bag. We'll see when we're talking about next week's TWIFO. Mr. Nick, we don't talk E-mini that often on the show, but it is obviously a very popular product, kind of a nice futures options alternative to the ever-popular SPY ETF out there. And the options on it are fairly active, as I just outlined for our listeners. Anything catching your eye out there in E-mini land today?
Yeah, as you were talking, I was playing around and taking a look at a few things and using some of the tools that are out there on the CME Group website. We'll just throw it out there again, let people know it's there. I think the reason we don't talk about the E-minis that much is because the change in the skew and the shape of the curve, it doesn't change all that much, right? So, there's not a lot of interest there other than, a lot of this stuff traded and it's the same stuff over and over again. There's always more puts than calls trading generally in terms of what's open and what's not, that type of thing. But I did go take a look at what we have out there on cmegroup.com/quick strike, QUIKSTRIKE. If you look for the vol-to-vol expected range tool, you'll be able to go out there and see, as of last night's settlement, we plot a little chart and that shows sort of the distribution for that current volatility in those days to expiration. And then also we plot 1 standard deviation, 2 standard deviations, 3 standard deviations. And it looks like this move, at least as what I was able to look at as you were having a chat with the audience was the only place that we moved outside of a single standard deviation was in the first contract, the September contract, which has 7 days to expiration as it stands right now. So even though and the reason I started to look at that is as we were talking about the big move down, 47 handles down. A lot of people sell puts in the E-mini market. So I was thinking, okay, what do those puts look like at the open this morning if you were short them? So if I go out to like the 14-day weekly or week 4, the EW4U6 at the beginning of the day, we were trading. The futures opened at 2171. And we're down around 2135 now. So 2135, that was a 25 delta put. So again, Mark, you might know better than I do because you're more in tune what goes on in the equity and equity indexes. But this might be just on the cusp of where people get short when they start to fire out those little puts and they're trying to catch premium and just let them decay out there. So some people probably got a little bit scared, but when you look at it from a pure, theoretical move standpoint in terms of the range given from the volatility, we're still within that single standard deviation. So, maybe that's encouraging for the people that were short the downside that we didn't quite venture out too far past into that next level. But in the front month, we definitely did hit the second level of standard deviation. As far as other interesting stuff, you mentioned it. The skew didn't change all that much. It's still, puts over the calls, and it's not that much difference from a percentage standpoint than it was when we started the week. So even the breakdown didn't really change all that much. We still had a bias to the put trading, in the volume, and same thing with open interest. So I think that might be why, even though it's a hugely successful and popular product, and if you go look at this week in options, make sure you're going to see defaulted 6 contracts, but make sure you click that expirations filter so you could add the rest of the weeklies in so you can really start to see where a lot of the action is. So, and the weeklies, remember, in the S&Ps, they basically replaced the serial options that used to be out there. So you're going to see a lot more weeklies, and they're going to be placed in strategic spots where the serials used to be. So a lot of open interest and a lot of volume in the week 3 for October. That's got about 42 days to expiration. But I don't know, Mark, I didn't see too many crazy strikes trade too much. I think you mentioned, I don't know if you mentioned week 3 out there, but there was some big buying in the 1800 strikes big trade in the 1800 strikes. So you don't know if people are selling into that break to get the pop in the volatility, or if there was some covering or whatever the case may be. But, I don't get too excited about the S&Ps. Why is that, Mark?
You're an old school Eurodollar guy. You're an old school, futures options guy. Yeah, S&P doesn't get your blood pumping. But you're right. That those could be, hedge levels. People would be abandoning their hedges. Day like today, there's an old saying, your hedge isn't a hedge unless you actually sell it. If you let it bounce, if you let it come back down and then rebound again, your hedge was kind of moot. So some people could be cashing out on those, maybe thinking this is just a momentary blip. If you're not so inclined, maybe you want to hold on to those. And, of course, the calls are interesting, too. The calls are kind of fascinating. I was just digging in a little more why we saw so many 2,200 calls today. I haven't really seen much, and they're all today, so it's clearly today's activity. This sell-off is what prompted all that upside. Again, all I could see is you're not going to be coming in and aggressively overriding calls on a day like today. So you're probably maybe looking at some people positioning for a dead cat bounce. We'll see. Unless there was some aggressive stuff there to close maybe as well. I'll have to check and dig into the open interest to see exactly. By the way, you're right. A little bit of a head-scratching paper today in the E-mini. Kind of fun. It's always, if it's just the same old out there in E-mini day after day, because the skew is usually the same. It's always going to be investment skew. What slope it's going to have is where it varies, but it's not like gold where it's all over the place. Speaking of all over the place, let's move on to, I believe, I'll have to check the results. The number 2 product we had in our product poll today is, if I could find it easily enough, which I clearly can't, but I think it was WTI coming in number 2. Crude, obviously, rocking and rolling this week as well. Had It's kind of interesting, Nick. I'm not sure if you saw this. We didn't put it all in the notes, but seemed like there was a bit of some contrasting opinions out there on crude. On the same day, crude rallied because because there was a surprise stockpile reduction. A lot of people then coming out saying, well, wait a minute, this is probably more due to the hurricane than anything else. And then also the same day that the Journal was going on about the stockpile reduction, Bloomberg had a big piece about the Asian Petroleum Conference and how most of the people they talked to over there were decidedly bearish on crude in the long term. And they said long term, we haven't really worked through our stockpiles yet, so we need to get through that before any sort of rebalancing can be had out there in WTI. So it seems like a kind of a tale of two crudes. Net on the week, they seem to kind of even themselves out. WTI finishing off up only pretty much a handle to like a handle and a half or so, depending on where you were looking, after vacillating quite a bit intra-week. Again, that rally kind of short-lived as people said, wait a minute, maybe these reductions in the stockpiles are a little bit more illusory than we thought. And so they hit it again, and then now today getting a little bit of movement again. But it's been an interesting week to watch crude. Once again, WTI open interest growing, so it continues to grow week upon week here, up about another 4%. Total volume out there this week, about 786,000 contracts. That's on open interest of about 2.2 million. So that's pretty aggressive numbers out there. I don't care what product you're looking at. It's a pretty high volume product. Vol again across the board. So given the vacillations we saw out there in WTI this week, Vol is decidedly mixed to unched. I'm not even going to look at the front week contracts because that's not really Vol anymore. That's Gamma. But looking a little bit farther out, a month and beyond, you can see Vol is kind of mixed. We also use a couple of other indicators to look at measures of Vol. If you listen to our Vol View show, we talk a lot about OVX and OIV. Those are the VIXs for crude. One's for USO, one's for WTI. So those two have been kind of in the low and mid 30 range over the last few weeks, about 35, 36, both of them ticking up today into the 38 to 39 range. So vol is creeping up out there. In general, that is what you would expect given if you had a extended move to the downside. We're rebounding a little bit again, so maybe that won't hold. But if we continue to progress into downward into the more of the put wing, you should see vol continue to creep up because, again, talking like we were doing before about the vol is richer in the put wing of WTI. So if we continue heading in that direction, then we should see vol come up. In fact, Nick, we did have a poll question about that as well this week. We asked our listeners, we said crude oil VIXs. So we said OIV and OVX were both around 38. That was as of this morning when we posted that. So they're a little bit higher now. They're in the 39, pushing 40 range. But we asked you guys, you said they're both in 52-week lows. Where do you think they will close next week? And so, Mr. Nick, we gave them the options of, let's see if I can get my exact numbers here, Nick. For some reason, I'm having the technical difficulties now. Twitter is not playing nicely with me. But we gave them the choices of 38 to 40, above 40. Then we had 36 to 38 and below 36. Where do you think, sir, what is your vote first? This is for next Friday, remember now, not this Friday. So where do you think those two crude VIXs will go out next week? They tend to move pretty much in lockstep within a half a point to a point or so they should be pretty close to each other. And where do you think is going to go out? And then what do you think is winning our poll?
All right, so this is I didn't catch it. This is the crude ETFs. Is that what it is?
No, this is both. This is the VIX on USO, so that's OVX, and then also the VIX on WTI, which is OIV. So similar products.
The VIX on USO and the VIX on W. Where do I? All right, so I'm going to pick the lowest one.
All right, so you say below 36. You say crude vol's coming in. I actually lean more the above 40 realm. That seems to be where our listeners. I think we're going to keep drifting lower, and that seems to be where our listeners are right now, with a slight majority, a third. People are pretty split on this one. Roughly a third saying above 40. And then a tie with 23% each, actually 23% for the rest of them, saying for all the rest. So our listeners pretty much evenly split around crude, which I think is kind of interesting. Getting back to the big developments out there in WTI, of course, we saw puts active this week. They were leading the charge. ACH 45 puts with about 48,000 total now, a few thousand more coming in at the end of the day here, for a total of 48,000, leading the charge by a country mile there. Again, pretty active yesterday, 27,000 coming in yesterday alone. So yesterday, again, a sell-off day in crude, not surprising. Puts would be leading the charge yesterday in particular, and again, net on the week. Number 2 was the OC 50, so again, kind of reflecting a bit of that push and pull, with about a little bit more than 10,000 fewer, about 35,000 contracts, about 17,000 of those coming in yesterday as well. So again, both of these kind of hitting a good stride coming into the latter portion of the week, reflecting just how much activity we did see out there in crude this week. I don't know, Nick, crude's kind of the product that keeps on giving. We're seeing a lot of interesting developments. Anything catching your eye out there from an overall volume or from a quick skew perspective out there in WTI this week?
I think the one thing that I noticed, or at least I noted in there, I'm going to look and see if I could find it, but just looking at the report again, I try to talk right off the report as we're having the show each week, just so I don't depend too much on the notes, but also to let people know that that's sort of how it was built to use. So you can just kind of dig in right off the bat and sort of figure out what you're seeing just by looking at the numbers and the rankings and that type of thing. I think that the thing that stood out the most is, given the way it's been trading, just the volume is pretty evenly distributed between the puts and the calls this week, right? So it's like maybe a slight edge to the puts, but generally you're seeing a pretty even exchange of trade there. So that might very well mix in with the poll results from the people kind of being evenly distributed about where things are. So could go either way from that standpoint. As far as looking at the skew, there was a change. There was a full vol to a vol and a half change in the skew, meaning that the calls are a little bit better bid to the put, so we became less negative. Now, again, like Mark said, we're not going to talk about the front month October. That's got like 6 days left, so the vol curve tends to get, it changes quite a bit in that last 7 days. So we kind of discount that from looking at any kind of trend that might be taking place. But we did see here in the November and the December, we saw the calls gain on the puts from a volatility standpoint. So if I take a look at the quick skew, and we see the puts were kind of flat this week in terms of the vol. When I say puts were flat to their premium to the at the money, and the calls, they sort of gained, they became less negative in their discount to the at the money. So that's sort of what we talk about every week, is that the quick skew, and it's always like how rich or cheap each side of the curve is to the at the money. And that quick skew number or that chart kind of tells you or gives you an idea of where things have been. You could look at that chart and see what the vol curve shape has been. But you're seeing a little bit better bid to the calls this week. So that's sort of eye-catching. And I'm not surprised that the vol is kind of, we saw an increase in the vol in the front month, October. But again, you can't really pay attention to that because that is primarily making up time decay, more or less. But if we look at where the futures were this week and last week, before the show, I was taking a look, and we really didn't. We tried to press past where we not where we were last week, but the week before we were trading. The high was in that 48 level, and we just couldn't get past there this week. So again, we've been talking about it for a while. As much as there's sentiment, that people want this market to go higher, I just don't see, given where we are and given how it's trading and given how volatility is, really not, there's no real pop telling us that it's going to continue one way or another. So, that's why my guess would be that the volatility is going to be lower, just because it feels like we're in a trending. But then again, I'm just a casual observer looking at the numbers, so you never know really what's going to be, but that would be a general guess. But other than that, I don't see too much. I don't see anything wacky here in terms of trades. We saw some 60 strikes trade out in the December contracts, some 55s, some 58s, and a small amount of 74.5. That's always an interesting strike, isn't it? I'll take 300 of the 74.5.
Yeah, I love the funky strikes. Contract. I love the funky strikes.
Yeah, it doesn't make. I just don't. I really, honestly, if anybody knows, send Mark a note and why. You go way out there. Why you pick that strike of all strikes? It's interesting to me. I I don't get it. But that would be sort of an asterisk version of a crazy trade of the week, just because it's way out there and it seems like an odd strike to pick. But as far as noting anything else, the thing to also, if you're looking at the report and anything's catching your eye, keep an eye on the two different levels of, they have a teal and a green total, so you can see the expirations that are sort of in the front and the most active. It's going to tell you what the change in open interest and the percent was there, and then you're going to see an overall for the product. So it's a really good indication of where a lot of the activity is. And again, we're seeing a lot of the change in OI is taking place in the front part of the curve, as we would expect in the commodities. So that's my 2 cents for the crude here today, Mark.
You are quite the crude man there, sir. No, well done. Move on. Let's see. We got some questions we want to get to too, but we also had gold included in that poll, and you guys cast your votes for gold as well. So we'll hit on gold a little bit, even though net the futures. If you just looked at the TWIFO chart right now, Nick, or the TWIFO report over there, CMEgroup.com/TWIO, you would say, gold didn't really move a heck of a lot, only 5 handles on the week. But that kind of belies the pretty aggressive range. They had about 30 handle range net, throughout the week before settling effectively unched within 5 handles. So week on week, it didn't look like much, but intra week it had a decent range. Overall, the increase in open interest was all right, about 3%. It wasn't lighting the world on fire this week out there in gold. That push pull continues out there in gold land. We talked about it before. Of course, post-Brexit, gold had the sharpest skew around. Everyone was flocking into it. The puts coming online a little bit after that, starting to get bid up, starting to get more attractive, and starting to get more interesting to people. So the puts started coming online, and eventually that skew pretty much evened out to that smile shape. For the last few weeks to month, it's been slightly biased toward the calls, with the calls leading the charge a little bit from the implied vol perspective, and that seems to still be the case right now. Overall volume on a put-call basis, the calls are still leading the charge, as well as in the volatility skew. Also, we're seeing the call slight buy, not aggressive, but a slight bias to the call. They're about, I guess, depending on how you break it down, about somewhere about 5 to 6% richer than the similar out of the money puts. Again, when you're comparing the call wing versus the put wing, which you can do right there on the TWIO report for yourself. And you can see also in the volume breakdown, kind of that little bit of push and pull. Calls were leading the charge with the DEES this time, a little bit farther out, Nick. We haven't been talking much DEES yet. That was indeed the case. The DEES 1,400 calls, so pretty far out, and also pretty far out of the money. Calls lighting it up with about 6,000 contracts going up over the course of the week. Let's pull up the volume really quick to see if that was pretty. Yeah, it was pretty evenly split through pretty much every day this week. It wasn't like all of them piled in today or anything like that. So pretty even split on the DEES 1,400 calls, followed right on the heels with, that was about 6,000 contracts, about 5,100 on the OCT 1,300 puts, with about 5,100 contracts coming up there. So again, kind of showing that even split with a slight bias to the calls that we were just talking about, also reflected in the volume leaders this past week. And then right on the heels of the 1,300 puts, the calls coming in again, this time back in DEES 14 halves. So even more aggressive, trading about 4,300 times this week. So if you're bullish on crude, or excuse me, bullish on gold, maybe you've got some cohorts out here. Maybe got some people looking for yield. If you're looking for yield, I don't know if DEES 14 half is the place I would go, but it's an interesting idea. Either way, pretty weird stuff. I know you're just talking about those kind of weird split strikes out there, Nick, for all things WTI. Maybe these out of the money DEES calls could also factor in for one of our, if not crazy, then at least head scratching trades of the week.
Yeah, I think we could. Yeah, we don't have much to choose from, so that's probably a good idea to tally those up and put those on the list as well. I think the one thing I wanted to mention here in the December contract was if you take a look at the open interest, right, you're seeing about 365,000 contracts of open interest. And if you look at the open interest profile tool report, you'll see what we try to do is we try to do the max downside and max upside strikes, so you can see where maybe that futures might be bounded from a trade range standpoint. And it's a little bit deceiving when you look at the December contract, because it's a really, really wide chart, and you see like the 1100s on the downside, and then you see all the way up to 2100s on the upside, which is, when you think about it, that's a little bit, it's way out there. So what I did was I wanted to take a look and see, and that open interest really hasn't changed in a long time for the 2100 strike, and inside of that is like the 1800 strike as well. So the 2100 is around, it's 50 plus thousand, and the 1800 was like maybe in the 30s as well. But if you take out that open interest, that's almost 100,000. So why do I bring that up? Because we see that the put call ratio on that is pretty low. It's like less than 0.4. But when you remove that 100,000, you get it all the way up almost to 0.6. So you had things, and those traded all the way back in between October 16th of 2014 and November 7th of 2014. So a majority of all the open interest that took place in those two strikes was almost 2 years ago, right? So when you start, so we look at these numbers sort of on the surface, but I wanted to, and so I just looking at those numbers, you kind of get one impression, but then when I looked at the open interest chart as well, and I saw how wide it is, right? You can't really, you're not going to tell somebody, oh, the range on gold is 1100 to 2100, right? They're going to kick you in the teeth saying, you didn't give me much benefit there. So I wanted to look and see where it was. So you can really discount a lot of that open interest because it's all sort of crummy, useless, way out of the money strikes that somebody bought a long time ago, and I didn't even look at what the premium was on those anymore, if there even is any that high out. There probably still is, given the well, maybe not. There's only 74 days left. But when you start to close that chart up a little bit, you see that we're really starting to look at, again, the same thing, sort of a 1200 to 1500 range here, and for all intents and purposes, that's kind of trending sideways for the most part. And one other thing I wanted to mention, we do have another measure in Quick Strike that we call the rent, and you and I have talked about this a little bit before, and it basically talks about how much the underlying has to move in order for you to really be worthwhile owning the options. And really, right now the rent is like $12 for the at the money strike in the December gold contract. I think it was the December that I was looking at. I can take a look here real quick. Yeah, it's about $12. So the only day that you really paid for having any of these options in your pocket was Tuesday, and that's when the majority of the move was. But any other day, even this $9 range that we had today, you were better off being short here, and especially given that you sort of rallied up and then came back down. So those are the things I really wanted to point out. Again, we've seen the same thing here as we did last week. Not much change in the volatility. A little bit of if we take a look, let's see what last week said in terms of the skew, just to verify that. I'm going back and looking at last week under report week. Yeah, skew was pretty flat. It got a little more less positive, like it did this week again. So it's 2 weeks in a row. Not much going on. Some movement intra-week, but at the end of the week, you're kind of right back where you started. So I don't know, Mark. In my book, that seems like it's a market that you just want to kind of stay short out on those outside strikes a little bit and let it trade inside that range.
Definitely does seem to be leaning that way. Speaking of leaning that way, you guys are on us with some great questions, so we got a little bit more time left. Let's squeeze you in. It's time for some futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody, welcome to the Futures Options Feedback. Like the man said, this is the portion of the show where you guys get to send in your questions, your comments. You can do that all sorts of fun ways, including via our app. It's all baked in there, as well as, like I said, on the website, or via Mixlr, Mixlr. If you're in there live, you can fire away at us right now for the remaining minutes of the show. Speaking of live, Nick, I'm not sure if you saw this. I love our listeners. They're tweeting in all sorts of fun stuff, and someone tweeted in a animated GIF. We were talking about gold, and looks like two, shall we say, soap opera ladies. They look like they're off a soap opera. And one of them, they seem to be conspiring with each other, and one of them is handing something else to the other one and mouthing something, and they wrote the caption below it, "Hold my gold." So clearly he's not a fan of, he's not buying these D's 14 halves, and also he has some skill in the animated GIF. Did you see that there, Nick?
I did see it. I actually saw it. I started laughing, but I know that my mic was off, and I favored it and already retweeted the thing because I thought it was pretty funny.
It is pretty funny. So we have some creative listeners out there. Speaking of listeners and gold, Nick, everyone's got gold on the brain this week, even though I wasn't trading that much. We got this question here from Liz Cat. She says, "Hey guys," well, hello Liz. "Thanks for my weekly dose of TWIFO." Well, you're welcome. She goes on to write, "I saw this headline, and while not strictly about options, I hoped you could give us your take on it. Seems like an interesting idea. Do we need it?" And she includes a link, and the link is to the headline, "Flash Boys Protagonists Aiming New Exchange at Gold." It's a Reuters article. I'll just break it down here. Nick, I'm sure you have a chance to see this before our listeners who haven't seen this. This article discusses, of course, IEX is the exchange that was profiled to great consternation of some and praised by others in the Flash Boys book by Michael Lewis as kind of the pushback against all the HFT players out there. They're going to level the playing field. They created that speed bump that we've debated endlessly on Trading Tech Talk, another program here on our network, that 350 microsecond speed bump. And that, of course, really just setting off a firestorm of controversy has lasted the better part of the last year. SEC just approved them. They are indeed a big boy exchange now, so they count as a legitimate exchange. And now going forward, looks like they have plans, and they already have, in fact, spun off a gold exchange called Tradewind. And this is still early days for this exchange. It's a separate entity now that's spun off from IEX with funding from IEX and a few others. And effectively what they're claiming they're trying to do is they're trying to use our old friend, the hot technology of the moment, blockchain, to try to improve the transparency and settlement of gold. If you trade gold, you know there is quite frankly a lot of room for improvement there. As they claim in this article, and this is totally true, they say it's too slow and too opaque as to who owns what and when along the way. Lots of room for error that requires manual reconciliation. Something that would be instantly reconciling, obviously as blockchain is, would be extremely welcome to a lot of people. Now, IEX is not alone by any means in going after this. We have the London Bullion Market Association also going to announce an electronic platform for this sometime in the near future. London Metal Exchange also looking to do something similar. They're saying in the first half of next year. So there are multiple players going at this. Nick, that's a clear sign to me that there is clearly an opportunity here. When I look at the gold market and the metals in general, you have the warehousing, you have the manual reconciliation, you have all these other things that are just laborious. It kind of reminds me of the old days, Nick, on the CBOE. I don't know if you had this on the CME, you probably did as well. You'd have to go in on the weekends and you had to manually check your out trades, and it was laborious and slow, and you had to go find the guy in whatever pit and say, hey, do you know this 100 lot of IBM calls or whatever? It was ridiculous. And now all that is pretty much gone. Out trades are kind of a thing of memory. They're all instantly reconciled, and the days of not, unless you have an open outcry pit like an SPX or a few other places, you might still have some out trades there. But other than that, the days of electronic out trades, they really don't exist. They're mashed up instantly. So the metals market could clearly use some improvement, whether it's IEX or LME or someone else who does it. I personally could care less that I have no dog in that fight, but I do think someone needs to step up and automate this, because the days of these warehouses and not really knowing how much actual supply we have when they're being shipped from one warehouse to the other, and there's a lot of really opaque things in the metals market that I think could be improved with this. What say you, Mr. Nick? You a fan, or are you going to take counterpoint and say this is terrible?
No, I won't take a counterpoint because I didn't get a chance to read the article. But just from a practical standpoint, it seems like you want to have a more appropriate clearing mechanism, and especially an audit trail these days, right? So I'm in agreement with you for the most part. I'll have to take a read on it. I didn't get a chance to read it before the show as I was putting out a couple fires prior to that. But I'm interested to watch the blockchain part of that as well, because you and I have spoken about this a little bit before. We tend not to talk about it too much here or elsewhere because we can get off track. But it is an interesting technology, and it has a lot of things it can do that make sense for this type of thing. And from what I read, it's fairly secure, or at least I felt like it's fairly secure just from what I read, and that it would work for something like this. So we'll have to keep an eye on this, and it's probably about time. But to talk to your other point about the I was on the floor when we had to do the out trades, and typically we had a guy doing the out trades for you. But part of your rite of passage when you're a kid or a clerk down there is you have to go through the out trades and go take care of the business as well. So yeah, it was laborious, and there's really no reason for that kind of thing to be happening these days.
Yeah, I spent my early days as the clerk many a Saturday doing out trades. Oh, how fun it was! 6 a.m. checking trades. Glad those days are in the rearview mirror. Let's see, we got time for I think one more here. Let's go to this quick one here at the end. This one's right up your alley, Nick. So I'll let you run with it. This comes from Sebastian. Kind of an interesting question. I'm not really sure what he's getting at. He says, "How do I tell what the actual volume of a product is?" And he adds, "How do I use that volume stat in my trading?" Well, the first part should be pretty easy. The obvious answer, you go to a guy like you, Nick, and go to QuickStrike or go to cmegroup.com/TWIFO, and you look up whatever product you're looking for, and that's where you see the volume. It's pretty straightforward. I'd imagine any broker worth its salt these days would be able to provide you with that very basic information on the product you want to trade. If you're going to a broker, you're trying to trade futures options with them, and they can't provide you numbers on gold or oil or whatever it is you're trying to trade, then you probably want to go somewhere else. It's a pretty basic function of the marketplace. You can also get them on a lot of free websites if you just search. Even some of the big ones like Yahoo Finance may even have it, depending on how broad and liquid and widely held the product is you're looking for. So if you do a nice old Google foo search, you should be able to find it. But of course, we've got it all set up for you here on TWIFO, cmegroup.com/TWIFO. So just go there. It's free. And you can get not only the volume, but also all the other stuff we're talking about here, the skew, the open interest changes, the volume leaders, all that kind of fun stuff. The latter part, how do I use that volume stat in my trading? That's an interesting question. There's, volume tends to be reflected in a lot of ways. I think the most relevant for a lot of our audience out there who are looking to trade fairly actively is it's reflected in the bid-ask spread of your contract. If it's a very active contract, a lot of volume, guess what? Going to have tight bid-ask spreads. If you're very thin, lightly traded product, guess what? Going to have very wide bid-ask spreads. And so that's going to be reflected in your actual slippage, your actual transaction costs when you're trading this product. So for you, the volume stat I think is most conducive to probably implying there's going to be a decent bid-ask spread and using that going forward. Also, of course, it'll help translate somewhat into open interest and how easy it will be to get into and out of a position. So bear that in mind as well. Mr. Nick, anything you want to add that I forgot here on how to find out something as basic as volume as well as what you do with that volume number?
Well, I think you touched on it as far as getting that information. You can go to the exchange sites, have to publish it. The only problem with some of the exchange sites, they are a day behind, so you won't necessarily be able to get that information until like the next trading day. But I think they're getting better at generally doing that. We get access to the files a little bit sooner as well, so we start filling today's trading volume will start getting filled in tonight at around midnight. We start running the jobs for the first time. But I would just mention again the open interest part of things. You make great points with the bid-ask spread and the volume, and that's from that standpoint. But you want to take a look at the volume and then if it trades a lot of times, but there's no change, you can tell a lot of things about a market then. If it trades a bunch, but there's no change in open interest, then it means that there's a lot of back and forth. So a lot of people were trading those strikes. You want to look at it, there's overall volume, right? Then there's strike level stuff. So you can look and you want to see how much open interest changed, right? So that's going to tell you how much. If it didn't change, that means there's just a lot of back and forth. If it did change and there was a lot of green, a lot of positive, that means there was new openings. People were opening positions in those strikes or opening positions across the product. If there was a lot of red, that means people were closing. So you can use it, like Mark said, to see, what the potential price spread is going to be on the bid ask. You can look at it to see how much activity, right? If there's a lot and there's a lot of open interest change, that means there's a lot of activity, a lot of trade. So that might be a good place for some liquidity and for you to participate. And then you also want to look and see opening and closing positions. But that's a great question, and it took me a long time to understand open interest, because you would ask, and it was because 10, I sold you 10, and it was it wasn't 20. Right? It was, we opened a position each and I sold you 10 and it's 10. So it took a long time for me to really kind of understand what that was all about.
Yes, the marvel that is open interest, the mystery, I really should say, because it still is, I think, mysterious to a lot of people. Certainly why we can't have it done on and at least, if not instant, then at least some sort of intraday pace. There it is. There's that music. That means, Nick, we've done it yet again. We've come to the close of yet another fun journey here on TWIFO. We started off in the land of E-minis because you guys asked us. We went straight into WTI again because you guys asked us. We're responsive to you guys here. You guys have a product you want us to hit up, something crazy, something obscure, hit us up. Let us know. Maybe we'll dive into it, something fun, mix it up a little bit. And, of course, gold. Those are the three big things still lighting it up this week. And, of course, some of your questions as well. We'd love to have your questions. Hit us up via the website. Via Twitter, via Facebook, however you do. You can hit Nick up as well at QuickStrike1. That's QuickStrike1 on Twitter. You should be following him, actually. He tweets out some cool stuff. Nick, you've been tweeting out all these crazy graphs and heat maps this week. In fact, some of our listeners, like Roger Barone, commenting on those, talking about your milk heat map. That was really intriguing to him. So tell our listeners, if they're not following you, what the heck are these heat maps and what are you guys up to over there in the land of QuickStrike?
Okay, well, a couple things. So I just tweeted out a volume versus open interest explanation. So who asked that question? Sebastian. So you could take a look. That's part of our quick EDU section. We try to put it out there so it's a little bit better understanding. It says that it's labeled for gold up there. That happened to be the product I was on, but this is sort of an agnostic explanation of how to think of volume and open interest. I've been tweeting out a lot of stuff. Heat maps have become kind of the chart du jour of late, and there's been a lot of interest, a lot of places where people want to just be able to look at stuff and see where the action is, right? So again, volume and open interest, that's a very popular heat map that tends to be out there, and that new tool we thought it was going out this weekend, but it will be available next weekend over on the CME Group website. That's the volume and open interest heat map tool. But there will be some new things out there in Essentials, and QuickStrike Essentials is the free version that you can register at cmegroup.com/QuickStrike, and there's going to be some benchmark heat maps and then some other sort of benchmark summary pages. So, again, just trying to get more information out there available to you at no or low cost, so you can, be abreast of what's going, abreast of the market, know what's going on, keep track, and have some good information there to make your trading decisions.
There you go, folks. Follow the man at QuickStrike1. That's no C, QuickStrike1. Make sure if you're not following us as well, do so as well, because we tweet out a lot of cool stuff, including ways you guys can participate on the program via polls and questions and topics you guys want us to cover. Hit us up there. You can always hit us up the old-fashioned way via email on the website as well. It's all there. It's all baked into the mobile app as well. But if you want to hit us up there on Twitter, we probably see those first, so that's probably the easiest. And, of course, make sure you stream us on Mixlr every Friday, 3 p.m. Central, 4 p.m. Eastern. Love to see you guys in there as well. And on behalf of Nick and, indeed, myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing and joining us live there in Mixlr. Love you guys as well. And we'll see you next week right here on This Week in Futures Options.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered. With market data reports ranging from open interest to the term structure of volatility, QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.